Welcome to Financial Issues, where we join reality with truth, helping you make the most of your money by honoring God with your investments. Now listen in as we give you the practical tools and advice you need to become a biblically responsible investor.
Welcome to Financial Issues. Thanks for tuning in as we talk about how to defund darkness with a biblically responsible investment strategy, one that you can adopt yourself by becoming a partner of Financial Issues and getting access to our asset allocation models along with our buy list and alerts of any sales that you might need to make. And as we also talk about funding the light, being a joyful and generous giver, and that's very appropriate to talk about here at year end. So we hope that you've been giving faithfully and consistently all year long to those places that the Lord has placed on your heart. But sometimes people find themselves at the end of the year with maybe extra income, maybe big bonuses and different things like that, and you're looking for places to give to, or maybe you got a little bit behind in your giving and you want to get caught up, or maybe you even want to get ahead for the coming year. So we've got lots of places that you can give to if the Lord hasn't already directed you in a certain direction. Of course, Financial Issues is a nonprofit. We're also partnered with Preborn Ministries, who is instrumental in pushing back the darkness and fighting the good fight against abortion, and our newest Road Kids Club. And if you want to be involved in helping to get the gospel preached in public schools, yes, public schools, they are a great ministry to support. You can find out information about us and our partners at our website, financialissues.org. On today's show, we're going to try to get it caught up on all of the questions that you guys have been sending in. So we're going to try to rapid fire Friday, which probably won't happen. But anyway, we're going to answer your questions that you've been sending in. Today will be my last live show for the year. I'll be taking off some time to finish up my work and sort of decompress and hopefully catch a new wind for the coming year and start out strong. So, but continue to tune in. We've got lots planned for you. In the meantime, Seth, you want to tell them what's on tap?
Yeah, I'd be glad to, Shana. So we'll be here Monday for a full show, obviously, and then the week of Christmas and into that first part of the week leading up to New Year's Eve and New Year's Day, we'll be having a lot of best of content, Shana, but we'll also have some special, never before seen content for those holidays. So you're going to want to tune in, especially Christmas Eve, Christmas Day. I'll be doing a little just short kind of devotional to point our hearts toward the gospel, those days. So that I hope you guys will tune in for those days. If you feel like making us a part of your Christmas tradition, which would be pretty cool. So,
and if you already have plans for the holidays, no worry, you can still catch it because we're on podcast. So if you do Apple Podcast or Spotify, you can always go back and catch the episodes that you missed there. And I'm sure those are going to be ones that you don't want to miss. And go to our website, financialissues.org, and our phone app. So that's probably the best way to make sure that you keep us all the time. Speaking of turning our hearts towards the Lord, let's get to the stewardship verse of the day. It comes from Luke 2:16 and 17. And they came with haste and found Mary and Joseph and the babe lying in a manger. Now when they had seen him, they made widely known the saying which was told to them concerning this child. Well, the concept of stewardship is not exclusive to money. I know that's what we all think of when we hear the word stewardship. Here comes some teaching or a lecture on tithing or giving or whatever. But stewardship is involves more than just our money. We could be good stewards of our time by not rotting our brains on social media all day. We could be good stewards of those people who are entrusted to our care and share the gospel message with them. Now, shepherds back in the time of Jesus's birth were not really known to be rich men. As Forrest Gump would say, I'm not a rich man. But in terms of money, but these shepherds proved to be very excellent stewards with the information that was entrusted to them. So they were privy to the knowledge that they had laid eyes on the Savior of the world, and they did not keep it to themselves. They went out and made it widely known. What do you think, Seth?
You know, Shana, it's interesting. You mentioned the shepherds. This verse talks about these shepherds. We often have perhaps a wrong understanding of the shepherds when we look at them in our manger scenes, for example, and see them as these nice little peaceful, meek and mild kind of people who just took care of sheep. That's not the way shepherds were. Shepherds were actually kind of social outcasts. They were also kind of tough guys too. A shepherd was in a job that you had to be physically fit. You basically had to be ready for hand-to-hand combat at any moment. So oftentimes shepherds would be kind of people who maybe were a little rough around the edges. You might have some criminals who were shepherds as well. These were not exactly warm and fuzzy people. So at their best, shepherds were kind of tough and warlike. At their worst, they could be criminal and even murderers. But it's really interesting that God chooses shepherds to be the first people to receive the greatest news in human history. It's interesting. If you read on to verse 20, that goes on to tell us that the shepherds had a response to this. They rejoiced at what they had seen. In other words, the shepherds got the message. These shepherds understood the Savior has come. I believe, Shana, that their hearts were regenerated right there. Perhaps maybe they were already believers and they were awaiting. But if not, right at this moment here, we can see clearly they came from darkness to light. They rejoiced at this great news. I would hope that we would all follow their example and joyfully, as you said, be good stewards of this good news of the baby in the manger by spreading that to everyone that we know. Of course, that same baby, Jesus Christ, would be born to die and ultimately rise again. It's the best news in the world. Really amazing.
Amen.
Absolutely. Well, Shana, let's get to our question of the day here. Just getting some dry powder back into the game. So this partner question coming from Michael. Michael is 56 years old. Michael says, aloha. We have several people who give the Hawaiian greeting, which is kind of fun. Michael's
awesome.
One of them. Yeah, he says, I'm interested in returning some of my dry powder into my asset allocation model. I have 3 energy positions that I was going to dollar cost average down. They're no longer on the buy list, but they are on the broad list. They're E48, E43, and E18. For a principal rule, should I simply focus on the buy list for new money, or does the idea of dollar cost averaging on energy make sense? So what insight would you give to Michael here, Shana?
Yep. Lots of great questions.
Yeah.
So, and it's really, I always love getting these detailed questions because it really tells us that people are following along with what we're putting out. And that's so reassuring. So what I would say to Michael is, because you only have 3 positions, if I understand his comments right, I would probably look to add a new one right now. So E48 and E43 are similar. They're kind of in the same line of business. If I had to pick one, I'd probably pick E43. I'm not suggesting that you sell the other one, but what I am suggesting is that you broaden out a little bit. So maybe instead of adding more money into them, you kind of count the 2 of those holdings together, add up the total percentage and look to further diversify within your sector.
Yeah, good stuff. And then getting to kind of a more broad question that he's asking, Shana, that have moved to the broad list. Is it just for buy list, or are we allowed to do that if it makes sense if they're on the broad list too?
Yeah, sure. So as long as we haven't issued a sell alert, so you just want to go to that sell alert tab and make sure that it's one that we haven't issued a sell, or that it's not in that sell list, and you're not overweighted in the position. So that's the next thing that you're going to want to check. You don't want to just add money to a position just because it's down, because sometimes stocks can stay down for an extended period, and then you may be tempted to add more money into it later, and then it may end up being a really overweighted position. As it turns out, perhaps there's a good reason that it's down, and maybe things don't get better and we end up issuing a sell. So I would just caution you from becoming really overweighted there.
Yeah, good stuff, Shana. And then last question here, just a reminder for us generally, what's the best way to dollar cost average, and how often might we do it?
Yeah. So, this is a really good time to make a distinction here between dollar cost averaging and averaging down.
Yeah.
A lot of times those terms are used interchangeably. Even sometimes on the show, we get the 2 confused. But just to clarify, dollar cost averaging is what you should be doing with your regular investment program. So dollar cost averaging is regularly adding a set amount of money into a single position over time at regular intervals. And so what happens is that you're buying fewer shares when the price is high. You're buying more shares when the price is down. This is a great strategy for your funds. So your mutual funds and your exchange traded funds, your ETFs. Now, averaging down is what Michael's really asking about here. He's asking about adding to a position, and you average down really maybe only once, maybe twice, to keep a meaningful weighting of that position. So you really only want to average down about once, and you kind of want to wait until you have a positive 30-day trend to make sure all of the downside, or make sure as much as you can that most of the downside is already happened, because you're not going to want to average down again. All right, folks, we got to take a break. Don't go anywhere. I'm your host, Shana Burt. We'll be back with more financial issues right after this.
Navigating through when you're determined to uphold your God-given values. Every dollar you invest is a vote for the world that you want to live in. Let your values guide your investment decisions and help to shape the culture in which we live. Become a beacon of light and pave the way with biblically responsible investing. Timothy Plan, where faith and finance collide. Before investing, carefully consider the fund's investment objectives, risks, charges, and expenses of the investment company. This and other important information can be found in the fund's prospectus. To obtain a copy, visit timothyplan.com or call 800-846-7526. Read each prospectus carefully before investing. Investing involves risk, including the potential loss of principal.
My name is Reagan Gardner, and I am in the 4th grade. Last year, I wanted to be like everybody else. I thought I had to act different, look different, and be different to be cool. When I joined Crossroads, I learned that God loves me just the way that I am.
Help reach more kids like Reagan with the hope of the gospel. To learn more about Crossroads Kids Club and how you can get involved, visit reachourschools.com.
Through the ministry of Preborn, the Financial Issues family has saved tens of thousands of lives of babies. What an amazing job that God has done through you, the Financial Issues family. Would you join us in saving the lives of babies? What an amazing reunion we will have in glory, meeting all the people that we have saved. Please go to preborn.org, that is preborn.org, or financialissues.org, and click on the Preborn banner.
Welcome back to Financial Issues. Sorry, I got caught up listening to the music there. I love this Christmas music. I hope that you're enjoying it as well. So we're going to try to get caught up on the many questions that you guys have been sending in. So Seth, what do we have?
Let's get 8 years old. Dave is still working. He'll be 59 and a half this coming July. Wants to roll out his 401k, valued right now at $1.6 million, into an IRA in his Fidelity account. He says, I have an active Roth and regular investment account that I have used to model the 45 to 55 income model since 2020. That's valued around $150. When told to sell, and have only bought items from the buy list per my model. Do I need to start over with this new money, or can I add to my existing position? And again, Dave is 58.
Great question there. So what I would say, don't throw the baby out with the bathwater. You know, you've been following along for a while. What's going to happen whenever you roll that money into your traditional IRA account? It's going to come in cash. Most likely, all of the rollovers that I've been part of happen in cash. not really seen any that allow you to keep your investment. So what happens whenever you do the rollover, the money, everything in your IRA is sold and then cash is sent over to your IRA. So when you go to update your portfolio tracker, that $1.6 million is going to come in as cash, and then it's going to show probably everything in your portfolio, every sector in your portfolio as underweighted. So, you know, you may have the opportunity to add to some of the positions that you have, and certainly you would be able to add some more. So as long as we've never issued sales on the things that are in your portfolio, I would say they're good to keep and potentially add to or establish new positions in a lot of sectors.
Great, Shana. Next one up is Chris, 54 years old. He's in the 45 to 55 model. He says, I asked several weeks ago about preferreds, almost the same questions. After restructuring of models a while back, my financial REITs are low. So I'm just wondering if some new picks are coming to the financial REITs, or do I just need to pull the trigger on the ones that are there? You've all been such a blessing with your recent picks. That's why I like waiting for them. That's great, Chris. Good stuff. What do you have for Chris, Shana?
I don't know. Chris's question may have been answered since he asked it, but you know, we're always looking for new opportunities. We're rotating through our sectors. We're getting eyes on every single sector at least once a month, and we've added a lot. So in the REIT sector, I think we have at least 5 or 6 that are currently on the list. So there should be plenty to pick from.
Awesome. Sarah's up next, Shana, 66 years old. Sarah says, with the portfolio tracker, if I change my model from the 55 to 65 model to income and growth, 65 into retirement, will I lose any information that is presently in the tracker? I'm 66. I plan to come out of full-time work next year, working toward part-time work until about 70. I've really enjoyed the growth. I'm seeing the returns with the 55 to 65 model, and I wondered if it just might be a good time now to shift models. So Sarah's kind of in that age, Shana, that I think a lot of people are wondering, where she's technically in the age of the next model, but wondering if it's time to move up to it.
Yeah, good. Glad to hear that your experience is going well, and I just want to make sure I get all the questions.
Yeah.
So yes, that is one of the I don't know if I call it a glitch, but it's one of the challenges that we have at the current website, where if you change models, you don't lose all of your information, like the stock symbols stay in, the cost basis stays in. What you lose is the sector. So they all go blank if you move from one model to the next, and then you just have to go through. So I believe it says this at the top of the portfolio tracker page, is that we recommend, you know, maybe taking a screenshot or printing out the sectors. Now, if you lose all the sectors anyway, it's okay. It's a great exercise to go back through and reconnect them, because it helps you remember what the companies are, what sector they're in. You may get a chance to go back and, you know, look at what the company actually does. And that's a great exercise to go through if you're managing your own portfolios, to stay familiar with the companies that you're in. So I don't know, Seth, do you know, is this going to be fixed with the new website?
I'm fairly certain that it will be, Shana. I need to check back and confirm that, but I'm pretty certain that this will be fixed. Of course, we're in the midst of the beta testing phase right now, so we're working some of these kinks out right now.
Good.
Yeah. Yep.
So either way, it's a great exercise to go back through and to reconnect them. As far as changing models, the time to do that, now again, our age models are based on the assumption that you will retire at age 65 and start taking income from your portfolio. So that's the key there. It looks like she's going to be pulling back from full-time work, working part-time until 70. So if you don't need to start taking income, you may continue staying in the model that you're in now, or you may take the next 4 or so years to slowly shift over to the next age model.
Awesome. Thank you for that, Shana. 61-year-old Ronnie is up next. Hi, Ronnie. Ronnie's saying, I'm following the 55 to 65 allocation, looking at the utilities on the buy list and comparing to my current holdings. I got UT40, UT89, UT7, UT26, UT66. Could you advise if any of these are too similar, duplicates, or should I eliminate and replace with one from the buy list, such as UT35, for better diversification? Thanks for your time. God bless. What do you have for Ronnie, Shana?
Yeah, so one of the things that we do in the descriptions is we try to put the subsector. So you can kind of go through, you can read the descriptions for the companies, and you can really see if they're they're too similar. Now, what I would say is that we are going to need more energy from all sources going forward. So certainly from traditional sources, certainly from fossil fuels. I think LNG is going to play a big part in providing some of the energy. I think nuclear is also going to play a big part in providing some of the energy that we're going to need in the future. Let me see if I can get the numbers. 40 and 89 are pretty similar. I mean, I think it's fine to own both. Some of the others are in natural gas. You can read the descriptions and see which ones they are. But 7% is currently the target that I think that you're following. We're working on the models. The new models that are going to come out are going to be fairly close to that. So, you'd be okay to add that 1% now and, figure out what to do later once the new models make their way out.
Awesome. Good stuff, Shana. John is up next. He's 57 years old, saying, good morning, Shana and team. I got a couple questions about the tech sector. So I have TE1 and TE55. Are those two similar, and should I change one of them? That's his first question, Shana. You want to tackle that one, and then we do his next one?
If I had to pick between the two, I would say TE1 is probably the better choice. TE55 is probably a little bit weaker, but I wouldn't necessarily worry about it. The model that you're in, if you're following the one that I think that you're following, will likely get a boost in the technology sector, so you'd be fine to keep them.
Awesome. His second question is this, Shana. Didn't purchase TE91 because he already had TE55. He said, I'm kicking myself now. Would it be worthwhile to switch out 91 for 55, or has TE91 peaked? What do you think?
I would not switch them out. There's even sort of a little bit of a rotation right now. We're seeing some weakness in TE91. It's still definitely the clear leader, but I would not swap them out. TE91 is one that we're watching very closely for drifting towards a BRI violation. I hope that they don't. I don't want to have to sell it, but if they cross the line, then we won't hesitate to issue a sell order. So I'd kind of stay put.
Awesome. And then the last question, Shana, from John. He says, I own TE68, which split into several others. It's not on the broad list. Did I miss a sell alert?
You didn't. So that was one of the ones that we removed from the broad list, thinking that it had never been on the buy list. Come to find out it had, so we evaluated it. We did issue a sell alert for it. So John, you should have gotten that by now.
Awesome. Good stuff, Shana. Next one up is Joe. Joe is, let's see here, 68 years old. He's wondering about two stocks. There's been some significant value drops since he bought via the buy list. That's CD45 and MA34. Is it time to replace these? What do you think?
They're still currently a hold for us. They're on our list. We do monitor them. So officially, no, we don't have any sell orders for them. As far as should you personally sell it, I mean, that's kind of up to you. You're always welcome to go look at the buy list. We don't recommend turning over your portfolio. We don't recommend, selling things that come off the buy list and buying the new things that are on there. Sometimes things come off the buy list just because they get a little bit extended in price, and we just don't feel like it's a good entry price for new money, but we think it's an excellent hold. So, you're welcome to review your sector to see, if you want to replace those with something else.
Awesome, Shannon. Mario is up next here, 67. Mario's saying, when are the new asset allocation models coming out? Simple rapid fire Friday question.
I know. And every time I start talking about that, I shoot myself in the foot because then I get everybody excited about it. It's nothing that's super time sensitive that you have to get done. Yeah. But it's part of the new rollout of the website. So unfortunately, I can't give you a rapid fire Friday kind of definitive answer. But as we roll out the new website, we're hoping early in the year. Now, early in the year could mean January, it could mean February, it could mean first half. No, hopefully it's going to be sooner rather than later. But
yep. Awesome, Shana. Mitchell is up next here. Mitchell, simple question. What LLM are you using? 64 years old.
So LLM, large language model. I think he's probably referring. I made some references to it on the partner conference call. And the two that I play around with are ChatGPT and Perplexity. I'm not endorsing either one of them. I have found ChatGPT to be wrong a lot. Now, it's very apologetic whenever you call it out on that, but you
As
really
one
have
does
to.
and should.
Right. But you really have to have some base knowledge and to be able to say, wait, I don't think you're right about that. And, it'll go back and say that it wasn't, but it's interesting to kind of see what's out there, but I'm not endorsing using AI for a lot of things, but it's interesting to see what's out there.
For sure. Yeah, it seems like, Shana, like many things. In fact, Sam and I had a conversation about this earlier this week. Like many things, AI, like a phone or like a car, can be used for really good things or really bad things.
Sure.
So being careful with it, good rule of thumb.
Absolutely. Yep. Well, folks, we're getting to the end of the short program today. If you listen on an outlet that only carries that short version, we wish you a farewell. For everyone else, stick around. There's more financial issues to come today. And even though this will be my last live show for the year, we hope that you're going to continue to tune in because we've got never before seen content that's going to be coming up, as well as some oldies but goodies. So I wish you a very Merry Christmas, and we hope that you will certainly keep Christ in.
In the last 10 to 15 years being in ministry, being married, something that has been constant in our lives is Samaritan Ministries. As we've moved, we've had babies, we've had different things come up, we have just been able to rely on Samaritan in ways that we never really even thought about before becoming members.
Our heart's desire is to plant roots and be in a place for a really long time. It's how we were raised. We see the benefits of that, but we also see the open-handedness of being used by the Lord wherever He calls, because we just assumed when we started pursuing church planting, the quickest way to get from point A to point B is a straight line. And with the Lord, sometimes you find out it looks a lot more like this. And yet, Samaritan was with us through the entire thing.
We didn't have to look into, we have to change insurances now because we've moved states or whatever the case may be. And it's just been a real blessing to us in different phases of life.
I'm Kyle.
I'm Colleen.
We're the Gen X.
And we're Samaritan members.
One of the emphases of preborn has been ultrasound in two ways. An ultrasound machine if a pregnancy clinic doesn't have one, and then an ultrasound session, which we underwrite hundreds of thousands of those. We've seen over and over again the dramatic results that when a woman encounters her baby for the first time and hears that heartbeat, she realizes the magnitude of what's happening here, that there is somebody else. That's her baby. So this is why preborn pushes out ultrasound as much as we possibly can. Preborn has seen over 200,000 babies saved, over 59,000 people come to Christ, populating earth and eternity, life for this life and life forever. Save the baby's life, but save the mother's life so that she can lead that baby to Christ. If we're bringing people into this world and the mother doesn't receive Christ and the child is born and the child lives its life and doesn't receive Christ, this is not a good end. And so we have to have the gospel as part and parcel and really the heartbeat of what preborn is.
Pharrell came to Crossroads as a fourth grader. His name had been brought to my attention by the school principal. She was concerned about the direction he was heading.
I remember I wasn't the best kid. I got into trouble a lot.
He became a very active part of Crossroads Kids Club.
Mr. Engel, he was the leader that really impacted my life in so many ways. I honestly didn't want Crossroads to end.
We would invite all the students to come to our youth group here at Waterfront.
I felt God saying, come on, come to me. It felt like I was set free.
And I'll never forget the day when we had the privilege and the honor to baptize Pharrell.
I hugged Mr. Engel. I don't know if he understands. I'm truly, thankful to have him through the whole journey. If it wasn't for Crossroads, I probably wouldn't be in the place that I am right now. I wouldn't be a follower of Christ.
Help reach more kids like Pharrell with the hope of the gospel. Visit reachOurSchools.com.
Securities offered through G.A. Reppel & Company, a registered broker-dealer and investment advisor, member FINRA and SIPC. Opinions expressed by Shana are hers alone and are for informational purposes only and do not necessarily represent those of G.A. Reppel or the Consider how the information applies to your situation prior to personally implementing it, and consult any financial professional you work with to make sure it's applicable to your financial plan.
Hey, Merry Christmas to you all this morning, Friday, December 20th. Welcome back to Financial Issues. I'm taking you the rest of the way. Seth Udinsky here with you. So grateful for you all today. I hope you're gearing up for the Christmas celebration. It's coming, folks, and we're excited. Did want to let you all know we did have a cell alert that came out this morning, so please act on that cell alert if you wouldn't mind. We have F2, CS58, HC19, and IN41. Most of those are for BRI reasons. So if you care about being biblically responsible, which hopefully you do if you're using our model, because if you're not, I'm not really sure why you're using our model, because that's what it's all based upon. But make sure that you act on that immediately, and please please part ways from those companies so that your money is not involved in things like the LGBTQ movement and abortion as well, which is one of the reasons. One of the companies on this, I believe, was CS58. Was for it's just some revelations that they're involved in abortion. So we want no part of that. So let's stay the course, honor God in our investments. Hope you'll act on that today. Hey, folks, I got a special guest with you today. As always, my dear friend, Craig Haugaard, our Financial Issues Ag Reporter, joined me for the final time this calendar year to give us a live Ag Report. Craig, welcome back, buddy. I was just talking to Craig, folks, about how brilliant it is when Craig and I come on. And so you're in for a real treat here. That's all I have to say. Am I right, Craig?
Well, I would never accuse you of falsehood. So, right. yeah, definitely spot on, Seth. Not a doubt about it.
Just really astute. Hey, Craig, on a serious note, brother, we're so thankful for you. And we know that this year has been a tough one for you with various health challenges. Could you just give our listeners an update on how you're doing now that all the surgeries are in the rearview mirror? How can we be praying for you now?
Well, yeah, this last surgery has just been I'm just not recovering real quick, to be honest with you. It's been a lot more painful and slower than the others have been. So I've still got some tubes and stuff that need to get pulled out here in early January. As we've talked, I've got one tube that was actually inserted in my abdomen, and then I caught a cold or whatever. Got a lot of congestion in my lungs, started coughing, and that's just a bad combination. So I don't know. I really appreciate the prayer, and I would just pray for more healing. There's just stuff going on that's just not coming around like it should be, and I appreciate the prayer so much. Really appreciate our listeners.
Sure, man. For sure. Well, we will keep them coming, brother. You got the whole FISM family is behind you. And, man, I'm so grateful for you joining me today. And I know that you're not feeling your best today. But, man, we appreciate you so much.
At my best, I'm probably at about 99%.
That's exactly right.
What normal people.
That's awesome. Craig at 70% is what the rest of us are at about 120. So that's basically how that goes. Right, brother? Hey, Craig,
sure.
Yeah, right. Let's move on now to a topic we've discussed a few times this past year, but we're getting some more developments on it now, brother. It's the fight for agricultural freedom. Now, I'm really interested in this. There was a recent headline on this front that we'll get to. Before we do, could you remind our listeners there's a disturbing trend, and once again, we've talked about it briefly throughout the year at various times, where we're seeing the U.S. government allegedly seizing farmland. Is this happening, and what can you tell us about it?
Well, seizing in some cases or in other cases just being able to go on and act in ways that really don't seem like they line up with what our founding fathers intended. This open fields doctrine, I think, is just a horrible doctrine. And basically it states that they can go on farmland. Open fields are not constitutionally protected, is basically the finding, and so that you can go on and for any number of reasons the government can be out there, and it's creating a lot of issues that really need to be dealt with. So I think the open fields doctrine I would hope would be challenged and overturned at some point. But then the seizure. Through eminent domain and that type of thing, we've seen some pretty heavy-handed approaches. And I think it just kind of points to the heavy-handedness we've seen in government lately. My wife and I were talking about, was it the squirrel that they, was it Peanut the squirrel? That
they basically executed him.
And shot point blank in the back of his head or whatever they did. I mean, it was basically an execution. Absolutely no reason, no solid reason for that kind of stuff.
Yeah.
And we're seeing that go on, obviously, with agricultural land, where they're just very heavy-handed in their approach.
Yeah. So, Craig, I had mentioned there was an article I saw. You'd actually had brought this to light for me. There's a situation ongoing right now. There's a farmer in Northeast Virginia by the name of Corey Garrett. He's in a fight right now against this very thing with his own farmland. What can you tell us about this? And my hope is this is not the case, but is this something that we need to be warned about, that we could be seeing more of?
Well, he has some land, like you said, it's in Northeast Virginia. It's along and I may pronounce this wrong, the Rappahannock River, and there's some folks that in county government that wanted to build a $14 million gallon per day water intake plant along that river, and then have a pipeline that, as I understand, would actually pump it through there into a different county where they need some additional water resources. And they selected his land. There was no process, no public input process. He had no input in it. They basically told him they were taking his land, and then offered him an insulting, I think $5,000 an acre, some ridiculous number for prime riverland in an area that's, I think, is experiencing some growth. So. It's just the lack of due process. I understand with eminent domain, there's times that your land is going to be taken for other purposes, but certainly at the very least we need a public process, an open process, and a fair process. And if the ultimate decision is that they're going to take that land, then at least get market value for it, for heaven's sakes. The way they've done this has just been extraordinarily heavy-handed and very un-American, I think.
Absolutely. So, Craig, it leads to the most important question. Is there anything farmers and ranchers can do to try to fight against this? Or is it really just comes down simply to hope and pray and vote for politicians who might protect us against this? What would you say to that? Is there anything we can do?
A lot of it is case by case. Now, there was a case in Texas where the state came in and they actually rebuilt Highway 10 in Texas, I believe down in the Houston area. And they raised the road, and then they put a 3-foot high water concrete wall around that road, which is basically a dam. Well, as a result of that, it went right through the middle of a rancher's property down there. You had land on both sides. Well, when Hurricane Harvey hit, they flooded, and they've had floods since then. That wall kind of acting as a dam. Well, as a result of that flooding, his cattle were in chest-deep water for days, and he had a large number of cattle that died and different things. And he actually filed suit and it went to the Supreme Court. In fact, it was just finally settled here this year with Thomas. It was Justice Thomas writing the unanimous opinion. So if Justice Thomas is writing it, we know that it probably went the way we wanted it to go. And basically it did. He was told that he had no claim for damages or anything. And this decision upheld his ability to pursue his claim for damages and be compensated for what had been done to his land. So I think that was positive, but I do think it's going to be case by case, and it's just going to be a fight. I think the new administration is perhaps going to be more open to laws that value property rights, and I don't know if legislatively we'll see some changes that would be helpful. But unfortunately, with a lot of this legal stuff, I think it's going to be we're going to have to win some cases and take back the rights that have, in many cases, been kind of seized from us. And I think that open field situation is one of those cases.
Yeah, absolutely, brother. Craig, thanks so much for bringing us up to speed on that today, brother. We're coming to the end of our time here, man, but anything else that we need to know of specifically today in the world of agriculture?
I'm sorry, I'm coughing my head off again.
All good, man.
We'll probably leave it right there, but yeah.
Absolutely. Well, Craig, man, we just appreciate you so much, brother. And again, we'll be praying for you, for your recovery. Man, I hope you can get some good rest over this, Christmas holiday. I don't know if you've got family coming in to visit you, but man, tell them, listen, kids, grandkids, I get it, but the king is resting. All right. So give me the chance to rest up a little bit. Right, brother?
There we go. It sounds like a winner.
That's awesome.
I appreciate you guys. You have a very Merry Christmas.
Yeah, you too, buddy. Merry Christmas, Craig. There he is, folks. That's Craig Haugaard, our faithful Financial Issues Ag Reporter. You can catch the Ag Report every day, folks, of course, on our live show, as often as we get to it, as well as on our app. Every Ag Report is on our app, so make sure that you do that. Listen to it there. Coming up next, folks, got a special guest for you. Alex McFarland is joining me in this final segment of our live show here today to talk about some very interesting things happening in the Christian space today. We'll be right back after this break. Stick with us.
I'm Shana Burke, host of Financial Issues, a nationally syndicated, biblically based program. During our daily program, we help you navigate the current financial climate and provide valuable insight so that you can be a good steward with the money that God has blessed you with.
My wife and I have been partners with you for several years, and we have benefited greatly from your advice and your ministry.
I never dreamed I'd be able to give money like this.
Join our partnership community by visiting financialissues.org/join.
I found out I was pregnant when I was 21 years old. For me, I was scared, I was shaking. They do an ultrasound, and that's when everything changed. When I saw my baby and when I heard her heartbeat, that was it. We've seen the hand of God ever since we stepped into the pregnancy center.
To find out how you can support the life-saving mission of Preborn, go to preborn.com/FISM.
Kids all across the nation are facing challenges such as isolation and loneliness and bullying, but there's still hope and the love of Jesus, and we want to bring that to those kids.
Today, Crossroads has 6 focus regions across the country. We are committed to adding 5 more regional coordinators, reaching more kids than ever before, but we can't do it without you.
God is doing something new, and we can see it in the lives of kids across America. Children are finding hope and belonging and community and purpose in the love of Jesus. The gospel is going into schools, and we need your help. We are trusting God to raise $200,000 of new funding. This funding will allow us to have 5 additional focus regions, as well as a team member who will oversee all of our regions. Please join us for this Drive for 5 in 2025. Let's place 5 new team members in cities around the nation and watch what God will do.
To help spread the love of Jesus to children across the country, go to crossroadskidsclub.com/5 in 2025.
Securities offered through G.A. Reppel & Company, a registered broker-dealer and investment advisor, member FINRA and SIPC. Opinions expressed by Shana are hers alone and are for informational purposes only and do not necessarily represent those of G.A. Reppel or the outlet on which you are listening. You should consider how the information applies to your situation prior to personally implementing it and consult any financial professional you work with to make sure it's applicable to your financial plan.
Welcome back, folks. Financial Issues. It is great to be here with you all this morning. Hey, folks, going to be working on getting Alex McFarland in just a moment. But until we get him in, I wanted to share a couple things with you all. Thank you for your prayers for Craig, of course. I know he appreciates those just so much. So keep those prayers coming for him also. I do hope he'll be able to get some rest. We did get a nice comment on Facebook. Alejandro saying, great to hear Craig. May the Lord, our God, continue to bless him through his Holy Spirit. In Jesus' name, amen. Yeah, I agree with you there, Alex, in that prayer. That's awesome, brother. And that is Alex who calls in as well. So great to see you there, brother. So many of you on the chat here also. Who have we got here? We've got Brian from Missouri, my man Brian, saying, no FISM till the new year. I won't know what to do this hour. Brian, I appreciate your love for the ministry, brother. So actually, we will be live on Monday. Shana, of course, had mentioned earlier in the show, she will not be live. I will be here, though, with Sam. We'll have a full live show for you Monday. We're looking forward to be able to be here with you then. Of course, Christmas Eve and Christmas Day, we will not be here in the flesh with you. However, we do have some very special content in those first couple segments of those shows, so I would encourage you to tune into those. There's also going to be some really, really good Classic Dan content during the week between Christmas and New Year's. So if you are missing FISM during that week, please do continue to tune in. Absolutely. Let me just say also that we are still offering gifted partnerships at a discounted price. So if you are looking to purchase a partnership during the month of December, you got about a week and a half left to do it. And it might even be a late Christmas gift. It could be after Christmas. And you're like, oh no, I forgot to get that gifted partnership. Now's the time to do it. $99 a year. $99 for the 1 year partnership. Remember, that's usually a $132 cost. So man, just a really, really good gift if you're looking for something for a young investor, or maybe it's someone who's older, but they're maybe new to biblically responsible investing and they want to know a little more about this. Gifting a partnership is one of the best things you can do for them. You know, we talk often about gifts that keep on giving throughout the year. It's nice to get a gift that you continue to use.
It's also a great gift for New Year's in general, because with all the New Year's resolutions, one of the top things that you see is people want to get their finances in order. This is a great way to get that ball rolling.
Absolutely. And by the way, folks, we will be back live, hitting the ground running right after New Year's Day, and we're going to be talking a lot about that. So yeah, that FISM partnership, if you know, this is part of why we wanted to leave that option open through New Year's Eve. In case you miss it for Christmas, it still could be a great kind of New Year's gift as you want to help someone else start the new year well. So that FISM partnership, a great thing to do. Of course, folks, I would be remiss if I didn't also mention how grateful we are for the year-end donations we've received from so many of you. And if you're looking for a place to consider deploying some year-end dollars and keep them out of Uncle Sam's hands, you can do it for FISM. You can do it for Preborn or Crossroads as well. Before any of those ministries, please do first consider your own local church. I do hope you all are members of a local church, and that is the first priority. But if you've given to your local church faithfully and you're looking for maybe something a little extra, we would not say no. And we'd appreciate that so much. But so many of you have given already, and we're so thankful. So we do thank you for that so very much. Appreciate that so much. Yeah, it's been it's been a really a fantastic year in the ministry, folks. These last couple of years obviously have been very tough. As you all know, we've lost, we lost our founder, Dan Celia, almost 3 years ago now. But man, we're continuing to move on, and not move on from him, but move on forward, pressing forward. It's been a wonderful year. We're able to finish in the black this year, and we're looking to continue that trajectory in 2025. Can't do that without all of you. So we're just so grateful for you. Thank you. Moving to the markets here now, folks. We had, so let's see, yesterday. So it was going to be an interesting day for the markets yesterday, because Wednesday was the crazy, chaotic, really bad day where for some reason the markets just did not seem to be happy with the Fed just pumping the brakes a little bit. It's funny that Powell literally cut rates and the markets reacted as bad as they did. Yesterday they cooled off a little bit. So they had some time to kind of settle their jets a little bit. By Thursday's bell, the Dow Jones was barely positive. So Sam, the Dow broke its 10-day skid barely. It wasn't that impressive, but it barely did it. The S&P 500 was just below the flat line, and the NASDAQ was also just below the flat line as well. So a really kind of a relatively calm day after the chaos of Wednesday. Now today, folks, let me just do something here really quickly.
I saw this morning futures were slipping quite a bit because of the Fed's inflation gate. I'm hoping that they're going to recover, because I'm seeing now that according to CNN, the Federal Reserve's preferred inflation gauge did move slightly higher in November, but not as much as economists were expecting.
It did.
They say that that's an indication that price hikes aren't accelerating in a worrisome fashion. That's according to CNN Business. So I'm hoping that the markets had initially feared that they'll be okay and react well, and that the Fed will likely not do anything too drastic either, which I don't think they were going to do. Anyway, the Fed seems to be moving in a more conservative direction, but I don't think they're going to back off their plans because of one particular inflation gauge.
Yeah. Absolutely. So we'll have to see how that goes there. Sam, thank you for bringing that up. That's exactly right. So the number came in, the measure indicated a 2.4% inflation rate. Sam, as you said, it was just lower than expected for the month of November, but nothing really to write home about for sure. So be interesting to see.
I think futures were just spooked a little bit by the previous disappointment from the Fed. So they were doom casting a little bit. So
exactly.
I think
as
we're going to be okay.
Seem to do, Sam, and that's a good reminder, folks. Look, we give you market updates every time that we're on the show. And so obviously we're looking at the markets. Don't look at the markets too much, keep an eye on them. But the markets are based on it. Sam and I were talking about this before the show today. They're based on fear and greed. There's these gauges of extreme greed to extreme fear. By the way, neither of those are good things. Greed is not good and fear is not good. But that's often is what is driving them. What you should be focusing on is focusing on putting your money to work in good, solid companies that most importantly are going to honor God with the money that God has given you. And that's part of why, Sam, we issued that sell alert earlier today. Again, many of those companies not biblically responsible, you know, and so that's what's going to drive us.
And I'd like to break down those in the coming days. Probably when we get back from New Year's, I'll do a whole BRI breakdown because it's really shocking what these companies engage in.
Absolutely.
You get things like these standard companies, sometimes even like energy companies, and you're like, well, what are you doing donating to all this stuff? Don't you have an oil rig to run or something like that? I'm speaking off the cuff, not about any particular company here, just a general. But still, it is incredible what these companies do get involved with. I want to say about the markets. This is why, considering how fickle they are, this is why it's a fool's errand to think that you're going to somehow magically beat the market with your own special investing technique. It never works, and it's because the markets day to day are run by these really carnal emotions of fear and greed that can flip at the drop of a hat. We saw them dip because of what the Fed did, but then tomorrow they could spike. Or I guess it'd be on Monday because the markets are closed over the weekend. But on Monday they could spike again because who knows? Elon Musk buys a new iPhone, and because of that, Apple stock goes through the roof, and then the Nasdaq jumps or something like that. It's just things you can't predict. But what you can predict is that over time you are going to see the steady growth because, while it's true that you're kind of having this mob mentality day to day, you are also getting in the markets the wisdom of the masses, which tends to be more correct over time than any one individual. That's very well put there, brother, for sure. Hey, Sam, here's a nice comment we got from Brian, and a doozy here. It says, in case you didn't have enough reasons to despise the Biden administration, they are selling off border wall for pennies on the dollar in order to try to get rid of most of it before Trump takes office. Brian, I saw some reports of that. They're traitors of the highest order. It really is sad. So vindictive.
And I do not... Folks, we're not trying to dunk on any one particular administration. We are simply reacting based on actions. And economically, for the last 4 years, it has been a disaster. It has been a disaster. And you have to wonder, it seems an awful lot like traitorous activity. Now, do I think that Biden is like a secret agent for our mortal enemy, China, for example? No, I don't think that. I think that there's a lot of incompetence and a lot of selfishness there as well. And that could lead to traitorous activity. Absolutely.
Well, I also saw today he's giving, $4 billion in student loan forgiveness yet again.
I saw
he's
that
just been so happy to dole that stuff out, which I thought for the longest time was an election ploy. I'm trying to pay off various people groups, voting blocks so that they'll vote for me. But now it just seems like I'm just doing it to do it because I know it's going to tick people off.
The number's $4.28 billion in student debt for almost 55,000 borrowers. That's a lot of taxpayer money. That is a lot of taxpayer money. So, folks, I as many of you are, I'm sure as well, I also am looking forward. I'm looking forward to January 20th. I hope we can get there. I hope the world is not in too much chaos before we get there. Hopefully World War III hasn't started. Hopefully the economy isn't totally gone. Hopefully there's pieces of the border wall left, like you had said there, Brian, on the chat.
I'll buy a couple of them.
There you go. Absolutely. It'd be a good Christmas present.
Maybe one or two panels.
That's exactly right. That's right. Hey, last thing really quick here, folks. We had a great Bible study this morning. We were in Daniel chapter 1, verses 2 through 7. We started that Daniel series, and I'm really excited I know many of you are as well. I got a lot of really kind emails over the last week or so about the Bible study and Josiah's surgery and all. We will not meet for Bible study this coming Friday. However, we will meet again the first Friday that we're back from the new year, so January 3rd. We'll be in Daniel chapter 1, verses 8 through 14, marching through the book of Daniel there. Boy, great to be here with you all on this Friday. A Merry Christmas to you if we don't talk to you. We'll be here, Lord willing, on Monday to remind you everything you have belongs to the Lord. Let's be found good worship on Sunday, and a Merry Christmas to you all. We'll see you next time for more financial issues.
If we ever forget that we're one nation under God, then we will be a nation going under.
Thank you for joining us. This has been an FISM production.